Welcome everyone to the video. My name is D. Anthony with evolutiontraders.com. Today is January the 3rd. So markets are resumed. Okay, we're back in session. Class is back in session. Time to get the hangover out of the way. Let's dive into the charts technical from a technical perspective here. We're going to start off looking at the triple Qs, which is the NASDAQ 100. Predominantly, this is what I'm going to use to kind of gauge my entries and exits in the stocks that I like to trade. I like to trade things like AMD and NVIDIA and Amazon and Tesla and Apple and so forth and so forth. I do also sprinkle in a little bit of SPX. I do also sprinkle in a little bit of Meta, a little bit of Microsoft, but predominantly everything that I'm going to be trading is a NASDAQ 100 stock. So if we kind of just look at the daily overview here, each candlestick is going to represent 1 day's worth of price action here. You can see that, going back about, 2-3 months, we've pretty much been going sideways. So this is classic range bound trading. If I can kind of explain exactly what I'm talking about here by getting my drawing tool out, if we can kind of see these three tops here, 1, 2, 3, and then we can kind of see these lows here, right? 1, 2, 3. We're kind of boxed in, right? So if you can kind of see this area here, give or take some overshoots, give or take some test up here at the top, we are in a nice range. And, a lot of traders do not like when we go range bound, right? And myself included, it's a little bit difficult. How you have to kind of play these ranges is you kind of have to short at the upper top half of the range, okay? Short as we get to the top, and you want to lock in profits towards the middle and then wait. You want to lock in profits towards the middle and then wait. You want to lock in profits towards the middle and then wait. You want to lock in profits towards the middle and then wait. Now, what do I mean by that? What I mean by that is when we are stuck in a channel, when we're stuck in distribution, especially as long as this has gone on. Yeah, if we kind of look at it, this is a 40-point range, right? So this is not a tiny range. We're not talking about 5 points. We're not talking about, 2 points here. We're talking about 40 points. So there's more than enough money to kind of make money on the way down, and there's kind of enough money to be made on the way up. You just have to be a little bit smart about it. Now, a lot of traders who come from that whole 2020, early 2021 kind of whole idea is there's a lot of breakout and breakdown traders. And what I mean by that is as we start to approach the tops here in the middle of the upper half of the range here, a lot of traders try to trade these breakouts and then they end up getting smashed and it comes back down. They lose a lot of money. They try to trade the breakout anticipating that it's going to move higher and then they get smashed on the way down. Here we get above these two tops, we try to trade the breakout and then you get smashed on the way down. So you need to think about it. You are buying when there's big sellers selling their positions. So for me, when we get to the upper half, okay, the upper half, this is where I want to start selling. I want to start selling here. 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 Now, I don't want to sell for profits down here, right? Even though this is going to be nice, we can never anticipate that it's going to get all the way down here. So the way I like to play these ranges is as we get to these upper halves, I like to sell on the way down, and I like to do the same thing on the way back up. So as we come down to the bottom of the ranges here, I like to start accumulating and buying here short term, right? And as we start to inch up into the middle of the range, I like to just lock in my profits, okay? And as I wait and see what we do here during distribution, I like to let it come back down. And as we're coming down is when I want to start buying again. And then when we get that nice bounce 2, 3, 4 days later, I want to start selling into the move. Now, it's not always going to work that way. And when it does not work that way is when you're going to get your move, right? So when we do finally lose this area here, we start to trade below, this is when we now have a trend back to the downside. When we do finally break above, this is when we're going to have a short-term trend to the upside, and that's when we can ride a little bit differently. But until something changes, that's just the way we're going to have to play it. So as we come down here again to the bottom of the range, what is this telling you if we're going to continue to be range bound? That we're going to try to work our way back up. So how we can play this is one of two ways. We can do one of two things here. we can start to get long here. Again, small size. And then what we can do is use this last previous low, which is going to be a price of around 260, 259.50 as our stop. If we do get some sort of bounce, right? So if we look like this, where we get some sort of choppiness and we get some bounce, and then we get a fake out, and then we start to come down and we lose this last low, we've got to X the trade and get out. That's a failed move, and get ready to flip our bias to start going short on the downturn. Okay, now we do have a little bit of a level down here at the lower channel at around 240. That could potentially be our next target zone here. 254 would definitely be a first stop, but again, that's how we want to play it. Or what you could do is let this continue to bounce, see what it does when it gets in this area, let it start to roll over, and as we come down, you can try to one, short here, right? And then relock in your profits on the floor back test. Or, okay, because there's a lot of ways you can play it, and a lot of people play, you know, different strategies, and a lot of people have a different kind of emotional emotional gauges on what they can handle, right? So if we do get rejected again here at this 20 or 50 day moving average, and we start to come down here, what we can do is wait, do we break this week's lows? Do we break last week's lows? If we do, then that's when you're going to want to get short. So those are all different ways that you can play it. As of right now, what I'm looking at here, what I can just see from a pure technical standpoint is that we had a little bit of a bounce, say, at the bottom of the channel. This blue line that you're looking at here is a channel. It's called a linear regression channel 50. You can see that we held it previously the last 2 days in a row, and actually the last trading session on the 30th of December actually closed over the 5-day moving average, which for short-term sentiment is bullish. Now today we did get that pop in the pre-market, and then that first about hour and a half off the market, a lot of things were moving. We got that big pop over that 10-day moving average with a lot of room to run into 272.44, which is the Triple Q's 20-day moving average. Now we were rejected in this completely reversed course here, but if you kind of look at where we stopped, not where the bottom wick is, but where did we close, we still held on. So the bulls did somewhat of a decent job holding on to this 5-day moving average. Now that does not mean that we do not go lower, but what it means is the bulls have a little bit of a fighting chance going into the end of this week to try to see if they can kind of hang on. Now what I'm looking at here is 1, 2, besides this 3 days here, 1, 2, 3, 4, 5 days of just sideways action here. This is distribution. This is classic here. This is classic for chopped. A lot of traders are going to get absolutely hurt and destroyed. So what I'm looking at is 1, 2, 3 bottom wicks here where bulls are trying to defend this zone here and hold this channel level. If we do start to crack below that 262, 261 area, I want to go short. My price target is going to be this first candle that did breach below. That price is going to be around 259, and then below that 254, going all the way back to 1013. Now our lower Bollinger Band is sitting at around 256.91, so keep that in mind as well. If you do get in on a short below this breach here, and we do come down to around that 256, that's definitely an area that we want to take profits on. Obviously, if we get a daily candle close below that or a weekly candle close below that, we do got a lot of room down to around that 240, but I just kind of want to open your guys' eyes up a little bit to kind of see potentially where we could be heading, what we've actually been doing with the price action, how you can actually play that for this week. These are just my ideas. Again, I'm not a financial advisor. I'm just a full-time options retail day trader. If you guys would like to trade with me and the crew, make sure to join the Discord. You guys can ask all sorts of questions there. If you guys want to learn my strategies and why I have so much going on my chart, visit evolutiontraders.com. There's a top bar there. You can sign up to become a lifetime member. That's where you can get access to all of my strategies and also the chat room and everything else. But I'll see you guys all in the next video, and I hope you guys all have a blessed week.